In this video, I am going to explain valuation of shares. The organization, the company need to find value for their company share in certain cases. So, let me explain what are the different situations when the company need to find the value for their share. Okay, that is a need for a valuation of share. So, the first one is when amalgamation or absorption of companies takes place or at the time of applying a reconstruction scheme or for assessment of wealth tax, capital gain tax, or at the time of applying loan or sanctioning loan by financial institutions on the security of shares, for conversion of preference shares into equity shares, or for advancing loans on the security of shares. So these are the different situations or different purpose for valuation of shares. See, there are three methods of valuation of shares are there. First one is net asset method or intrinsic value method. Some different names also there for this particular method. The first one. Second one is yield method, and third one fair value method. So in this video, I am going to explain three different methods of valuation of shares. Let us see the first one. Net asset value of shares. So this formula is applicable when the company calculate value for their share based on the asset of a company. Okay, so in that situation this method is applicable, that is net asset value method or intrinsic value method. Formula for this method is net asset available for equity shareholder. So net asset means you need to find the net asset available for equity shareholders alone, which means you need to take the total asset and you need to subtract the liabilities, that is third party liabilities including preference share capital and other liabilities, and then you will be getting a net asset which is applicable or available to only equity shareholder. So first, in order to apply this formula, you need to find this one, that is net asset available for equity shareholder divided by total number of equity shares. This information will be given in the problem itself. So only thing you need to find this value, that is net asset available for equity shareholder. Let me explain the format for this one. Calculation of net asset available for equity shareholder. So here you need to take the total asset, that is assets at market value. So you have to take all asset, that is goodwill if any, fixed assets, investment and current asset. See, you need to consider certain important factors while you take the asset value. The first one is goodwill. See, for goodwill, a proper value should be placed on the goodwill of the business. I am going to upload a separate video to calculate goodwill. So there are different methods are available to compute goodwill. Okay, so if the information is given in the problem means you need to find the value of goodwill according to the information. If not, just leave it. See, in some problem, the goodwill value will be given in the problem itself in the balance sheet, but nothing will be given in the adjustment. In such case, just eliminate goodwill. You need not take goodwill. If the goodwill amount is given in the adjustment means, in such case, you have to take into consideration. That is, the first one is goodwill. Proper consideration is required for goodwill. You need to be very careful while you take the goodwill. And second one is fixed asset. If there is any fictitious asset which is given in the balance sheet asset side means, just leave it. You need not take into consideration while you calculate this one. That is the net asset available for equity shareholder. So in this calculation, just eliminate all fictitious asset. Fictitious asset means it is not a real asset, but certain things will be recorded in the balance sheet asset side. For example, debit side profit and loss account. So usually profit and loss means net profit, which will be given under liability side. If it is given in asset side means it is a loss, but we used to show under asset side. So it is also one of the example for fictitious asset. In the same way, discount on issue of shares and debentures. So when you issue shares and when you issue debentures, you can issue at discount. So the discount, you are allowing discount, no, that amount is a loss for the company. That amount will be recorded under asset side under fictitious asset. Why? Because it is not an asset, but we are showing under asset side. So it is called as fictitious asset, that is, it is not a real asset. The next one is preliminary expense. Preliminary expense means this expense will incur at the time of establishing a new company. A huge expense will be incurred at the time of establishing a new organization. So that amount will be considered as a asset, that is fictitious asset, that will be shown under asset side, and every year gradually that amount will be written off. That is, written off means just like a depreciation. Okay, but here you need to use this term, written off. Preliminary written off will be recorded under debit side of profit and loss account. Okay, so the remaining amount will be shown under asset side. No, that asset is called fictitious asset. It is one of the example of fictitious asset, that is preliminary expense is also one of the fictitious asset. If you find any these fictitious asset in the asset side, just ignore it. You need not record here. Here you need to take only certain items. That is a goodwill that I have already explained you. Next one, you can take all fixed asset, that is tangible assets. And next one is fictitious assets totally eliminated. Then next one, investment. The investment is a non-trading asset. So this is also comes under this calculation. You can take into consideration while you calculate this. The next one is current asset. Current asset means all assets which can be easily converted into cash within 1 year is called current asset. That is stock, debtors, bills receivable, cash in hand, cash at bank. These are all called as current asset. While you take debtor, just see the adjustment. If there is any bad debts that should be subtracted from the debtor, the remaining amount can be taken into consideration. In the same way, stock. So stock can be at different forms. No, if it is finished goods means you can value at market price. If it is raw material or work in progress means which can be calculated based on cost price. So this is the information regarding current asset. That is, for debtor also I have explained, for stock also I have explained. Okay, so these are the important factors to be considered while you calculate asset at market value. Next one is after finding the total asset at market value, then you need to subtract liabilities. So liability means you need to take only third party liabilities, that is current liabilities, debentures, preference share capital. So preference share capital also should be subtracted. Why? Because you are going to find net asset available for equity shareholder, which exclude preference shareholder. So you need to subtract the preference share capital also if it is given in the balance sheet liability side, or else you need not worry about preference share capital. So after finding the total asset, you need to subtract these things. So the first one is current liability. What is the meaning of current liabilities? Within 1 year you need to repay that liability is called current liabilities. So at the same times, if there is any provision needed for taxation, provision for dividend, or any other outstanding provisions, all the provisions should be made according to the adjustments if any. Okay, then debentures. So debentures also third party liabilities which is not belong to equity shareholder. And for preference share capital also you need to subtract. While you take the preference share capital, including arrears of dividend if any. If there is any arrears of dividend which is belong to preference shareholder means that also will be included along with this value. So subtract these things from the total asset, that is current liability, debentures, preference share capital. In current liability, all the provisions will be included, and after subtracting this you will be getting net value. No, that amount is called net asset available for equity shareholders. Now I am going to solve this problem. In this problem I am going to explain 3 different methods of valuation of shares, that is intrinsic value method, yield method, and third one is fair value. These are the 3 methods we are going to see with this problem. Look at the problem. The following is the balance sheet of Mr. Rajan Limited as on 31st December 2014. Look at the asset side. Land and building, machinery at cost price less depreciation. Depreciation is already adjusted. Trademarks, stock, debtors, cash, preliminary expense. Then liability side, share capital. That is 40,000 shares of rupees 10 each. General reserve, workman saving account, profit and loss account, sundry creditors, provision for taxation. So these are the assets and liabilities. Now look at the adjustment. The machinery is worth 2,40,000. See, you need to take only the market value. So this is the book value and this one is market value. So while you calculate net asset, you have to consider only the adjustment value. Okay. See, the machinery is worth rupees 2,40,000 and land and building has been valued at 4,80,000 by an independent valuer. And then 16,000 of the debt are bad. That is bad debt 16,000. When you take the debtor, you have to subtract 16,000 because it is a bad debt. The profits of the company have been as follows. In the year 2012, 1,60,000. In the 2013, 1,80,000. 2014, 2,12,000. It is the company's practice to transfer 25% of the profit to reserve, ignoring taxation. Find out the value of shares. Similar companies give an yield of 10% on the market value of their shares. Goodwill may be taken to be worth. I told you no. If the information is given in the adjustment means you can take it into consideration. So goodwill may be taken to be worth 3,20,000. This amount is not given in the balance sheet, but this amount is given under adjustment. So you can take it into consideration. So with this information, you need to find the value of share according to three methods. First one, net asset method. Second, yield method. Third one, fair value. See, the first method is net asset method or intrinsic value method. So what is the formula? Net asset value of shares is equal to net assets available for equity shareholders divided by number of equity shares. So the number of equity share is given in the problem. Look at the problem. So how many number of shares? 40,000 shares. So this amount is given in the problem itself. Now you need to find the first one, that is net asset available for equity shareholder. After finding the net asset available for equity shareholder, then divide 40,000. That is total number of equity shares is 40,000. Okay, so now let us see how to calculate this value. Calculation of net assets available for equity shareholder. See, while you take the asset, look at the adjustment. Just take the agreed value of, that is market value of assets and liabilities. Okay, so the first one, machinery worth 2,40,000. Assets at market value. First one, machinery. So according to adjustment, the market value is 2,40,000. Next one, land and building. How much? 4,80,000. So first one, machinery we have taken, and then one, land and building have been valued at 4,80,000. Land and buildings 4,80,000. See, land and building we have taken the market value. Machinery also we have entered the market value. Next one, trademarks. So nothing is given regarding trademarks in the adjustment. So you can take this value. Stock how much? 96,000. So regarding stock, nothing is given in the adjustment. So you can take the balance sheet value. How much? 96,000. Stock 96,000. Next one, debtors. See, debtors 1,76,000. Some information is given in the adjustment. Look at the adjustment. 16,000 of debts are bad. So you have to subtract this value from debtors and the remaining amount can be taken into consideration. How much debtors? 1,76,000. No, 1,76,000 minus 16,000 bad debts. Debtors 1,76,000 minus bad debts 16,000. Balance 1,60,000. We have entered land and building, machinery, trademarks, stock, debtors. Next one, cash. How much? 1,04,000. So nothing is given regarding cash. So you can take 1,04,000. Cash 1,04,000. Next, preliminary expense. I told you no, preliminary expense is a fictitious asset. If there is any fictitious asset, just ignore, eliminate. You need not show this into calculation. Then we have entered all the items in the asset side. Now look at the adjustment if there is any other asset which is given in the adjustment. See, look at the last point. Goodwill may be taken to be worth 3,20,000. This amount is not given in the asset side, but they are valued worth how much? 3,20,000. So you can take into calculation. Goodwill 3,20,000. Now find the total asset. 2,40,000 plus 480 plus 40 plus 96 plus 160 plus 1,04,000 plus 3,20,000. What is the total asset? 14,40,000. Enter outer column. Next, you need to subtract current liabilities and third-party liabilities. First one is share capital. It is an internal liability. So, you need not subtract this. Then general reserve. So, general reserve also which is belong to shareholder. Okay, so leave it. Workman saving account. So, it is a third-party liability which is maintained for employees. So, this amount should be considered for calculation. Then profit and loss, that is net profit. This amount also belong to shareholder. So, you need not take this. Sundry creditors, that is a current liability. So, you can take into consideration. Then provision for taxation also third party liability. So, you have to take only three things. One is workman saving account, sundry creditors and provision for taxation. So, these are the three third parties liabilities. Subtract all third parties liabilities. First one, workman saving account 60,000, sundry creditors 1,96,000, provision for taxation 1,20,000. Now find the total liabilities and subtract from total asset. You will be getting net asset available for equity shareholder 3,76,000. Now what is the balancing figure? 10,64,000. That is total asset at market value minus third parties liabilities. The amount is called net asset available for equity shareholder. How much? 10,64,000. Now let us see the formula to calculate the net asset value of shares. Now look at the formula. Net asset value of shares is equal to net asset available for equity shareholder divided by number of equity shares. Number of equity shares is 40,000 shares. No. So how much amount my net asset? 10,64,000. Net asset value of share is equal to net asset available for equity shareholder 10,64,000 divided by how many number of shares? 40,000 shares. What is the value? Net asset value of share is equal to net asset available for equity shareholder. How much? 10,64,000 divided by how many number of shares? 40,000 shares. You will be getting rupees 26.60. Next one is yield method. Yield value per share. That is yield is the effective rate of return on the investment made in the shares by the investors. So this is always expressed in terms of percentage. So the first one is you need to find ERR, that is expected rate of return divided by normal rate of return. So this NRR will be given in the problem itself. So you need not worry about this. So first you need to find the expected rate of return. Okay, there is a separate formula to calculate ERR. So after finding this, just apply this formula. ERR divided by NRR into paid up value per share. That is each share value is how much? That will be multiplied. Then you can get the yield value per share. So this answer will be always, the yield value is always expressed in terms of percentage. So let us see the first one. That is expected rate of return. Formula for ERR is profit available for equity dividend. See, while you calculate profit, this is adjusted profit, that is after making some subtractions. So after adjusting certain things, the final amount is called as profit available for equity dividend. So here you need to eliminate all non-recurring income if any. If there is any non-recurring income in the problem, that will be subtracted from the net profit, and if there is any income tax, that will be subtracted from the net profit. In the same way, if there is any reserve, transfer to reserve or making allocation to reserve or any preferential dividend, so all these things should be subtracted from the net profit. After adjusting these things, the residual amount, the balance amount is called profit available for equity dividend. So after finding the net profit, the entire amount is not applicable to equity shareholder. We need to make some allocations, that is taxation. We need to pay tax and we need to make some reserve for future. We need to declare dividend to preference shareholders. So after making all these adjustments, if there is any residual amount, that amount will be applicable to equity dividend. So you need to find profit available for equity dividend and then divided by paid up equity share capital, okay, into 100. You will be getting ERR. So after finding ERR, just apply this formula, that is ERR divided by NRR into paid up value per equity share. So according to our problem, the paid up value per share is 10 rupees each. Okay, then NRR, normal rate of return, also given in the problem. Yield of 10% on the market value of their share. This is called as normal rate of return. Okay, 10%. Paid up value per share also is there. Normal rate of return also is there. So only thing you need to find ERR, that is expected rate of return. Profit available for equity dividend divided by paid up equity capital. So how much paid up equity capital? Paid up equity capital is 4 lakhs divided by 4 lakhs into 100. So let us see how to calculate profit available for equity dividend. According to yield method, yield value per share is equal to expected rate of return divided by normal rate of return into paid up value per share. These two information is given in the balance sheet itself. Now you have to find ERR, that is expected rate of return. Formula for this calculation is profit available for equity dividend divided by paid up equity capital into 100. So now we have to calculate this one. Look at the adjustment. The profits of the company have been as follows. In the year 2012, 1,60,000, 13, 1,80,000, 14, 2,12,000. 3 years profit is given. In this case, you need to find the average profit. Total profit for 3 years, 1,60,000, 1,80,000, 2,12,000. How much? 5,52,000 is there. Now you have to find the average profit. Before you find the average profit, just see if there is any non-operating expense. If there is any non-operating expense, that will be subtracted from the total profit. Then you can find the average profit. Look at the adjustment. 16,000 of the debts are bad. It is a non-recurring transaction. This will be subtracted from the total profit. Bad debts how much? 16,000. You have to subtract this from the total profit because it is a non-recurring. This is not going to appear for every year. It is a non-recurring. So you need to subtract from the total profit. After deducting 16,000, this is the total profit for 3 years. Now we can able to find the average profit. That is 5,36,000 for 3 years. No, divided by 3. You will be getting average profit. This is the average profit. That is total profit for 3 years divided by 3. You will be getting average profit. How much? 1,78,66666. No, you can convert into round number, that is 667. After finding the average profit, just see if there is any taxation or any transfer to general reserve. If there, means that will be subtracted from this profit. And after subtracting all these things, the remaining amount is called profit available for equity dividend. Just look at the adjustment. It is the company's practice to transfer 25% of the profit to reserve. Ignore taxation. So you need not subtract tax because they clearly given that ignoring taxation. So you need not subtract for taxation. You need to allocate 25% of profit to reserve. That is 25% on the average profit. Now we have to subtract 25% of this average profit. That amount will be transferred to general reserve. So 25% on 178,667. What is the value? 44,667. The residual amount. What is the balancing figure? That is the residual amount is 1,34,000. This is the average profit, and from average profit you have to subtract general reserve and tax if any. So according to this problem, taxation is totally ignored. So you need not worry about that, and you have to subtract 25% of general reserve, which is given in the adjustment. That is 25% of average profit. The remaining amount is called profit available for equity dividend. Now just apply the formula. ERR is equal to profit available for equity dividend. How much? ERR is equal to how much profit is available? 1,34,000 divided by paid up equity capital. How much paid up equity capital? Paid up capital is 4 lakhs. 4 lakhs into 100. ERR is equal to profit available for equity dividend 1,34,000 divided by paid up equity capital 4 lakhs into 100, 33.5%. Now you can find the yield value per share. Look at the formula. Yield value per share is equal to ERR. What is ERR? 33.5%. NRR 10%, which is given in the problem. Paid up value per share is 10 rupees. Now just apply this formula. Yield value per share is equal to ERR. ERR how much? 33.5 divided by NRR 10% into paid up value per share is 10 rupees. So what is the value? 33.5 divided by 10 into 10. Answer 33.5. Yield value per share is equal to ERR. ERR is 33.5% divided by NRR 10% into paid up value per share is 10 rupees. Okay, 10 rupees is equal to answer 33 rupees 50 pice. So according to yield value per share, what is the value per share? 33 rupees 50 pice. Now let us see the third one. Third one is fair value. So fair value formula is net asset value plus yield value divided by 2. It is just like an average of both the methods. So you have got the value for net asset value and yield value. No. Now just find the average. The average value is called fair value. That's all. Look at the net asset value 26 rupees 60 pice. No. 26.60 plus yield value 33 rupees 50 pice. Fair value is equal to net asset value is 26.60 and yield value is 33.50 divided by 2 is 30.05. So this is the fair value according to the problem. So in this problem we have seen 3 different methods. First one is net asset method, second one yield method, and last one is fair value method. Thank you.